Good morning. Texas versus Florida versus Arizona. And which state's going to win for investors? And the short answer is Texas wins on scalability and fundamentals, whereas Florida wins on migration and premium pricing, and Arizona wins on growth momentum. But your strategy determines who's the real winner. So the big picture here is that these three states are doing something very different to dominate. And if you're looking at commercial real estate in 2026, you're not choosing between all 50 states. You should be choosing between Texas, Florida, and Arizona. Why? Well, population growth, business friendly environments, and migration driven demand, but also institutional capital inflows. But the risk profile, the returns, and strategies are going to vary dramatically within each state. So let's talk about Texas, the cash flow and scale play. And why investors love Texas is there's massive population growth. Think in the Texas Triangle, Houston, Austin, Dallas. And there's no state income tax. There's strong job creation across multiple industries. And industrial and retail demand are driven by logistics and rooftops. For an investment strategy, Texas is about cash flow and scalability. In industrial parks or retail centers and growth corridors like Katy and Fulshire and FM 1463, but also multifamily and secondary submarkets. And the key advantage is diversification plus affordability gives you a little margin for error. And then the risks there are that there's oversupply in certain multifamily markets and property taxes can compress returns. So the bottom line is if you're building a portfolio and want predictable income, Texas is the most balanced play. Next is Florida, the appreciation and migration play. So why investors are flooding to Florida is there's a lot of high income migration from states like New York, Cali, and Illinois. And there's international capital inflow and there's strong rent growth historically. So the investment strategy for Florida is it's about appreciation plus premium tenants. So thinking Class A multifamily, trophy style, retail or mixed use, or hospitality and lifestyle assets. And the key advantage in that state is there's pricing power. Plus there's demand from wealthy tenants too. So the risks are insurance costs, like in Texas, are rising significantly. And there's weather exposure because of hurricanes. And it's also the pricing's already elevated in Florida is another consideration. And the bottom line is that Florida will work best if you're betting on long-term appreciation and tenant quality, and not just the yield in between. Next state is Arizona, the growth and momentum play. While Arizona is surging, there's a massive inbound migration. There's semiconductor and tech investment from TSMC and supply chain groups, but there's also rapid suburban expansion. And the investment strategy there is that Arizona is about growth velocity. So build to rent communities, industrial near manufacturing hubs, and value add multifamily projects. And the key advantage for the state is that it's early stage growth, and it means there's upside potential. Now, the risks are there's volatility from rapid expansion, there's water supply concerns is a big one, and it's more sensitive to economic slowdowns. The bottom line is that Arizona is the play if you want upside and are comfortable with more volatility. So let's do a side by side comparison. And the states are Texas, Florida, Arizona. And we look at cash flow as well as appreciation and risk level, whether it's moderate, high. But also we look at scalability and entry pricing points, whether it's low, high, or moderate. So the investor strategy is which one's going to win is really the question we're trying to answer. And here's the truth that most people miss. There really is no universal winner, only strategy alignment with your goals. And if you want stable cash flow and to scale, think Texas. And if you want premium appreciation and wealth migration, think Florida. But if you want growth and upside potential, Arizona is your ticket. In my take, from a Houston CRE perspective, and from what we're seeing in Houston, Katy, Fulshire, and West Houston, that retail is following rooftops. So Ellison, Jordan Ranch, there's strong industrial demand, and institutional capital is quietly accumulating. And Texas is still the best risk adjusted market right now. So the thought I want to leave you with is that investors who win in the cycle aren't chasing hype. What they're doing is they're aligning market selection, where they want to be, the deal structure, and their financing strategy. Because at the end of the day, structure is going to beat rate and market beats timing, but execution trumps all three and it beats everything. And that, my friends, is it for the day. Please visit my website, HoustonRealEstateBrokerage.com. You can figure out how to get a hold of me. Love to have a conversation and see how we can do to help.